Good news is bad news. I feel like it's 2013 again. Coming up here in the jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 8:54 here in the middle part of the country on Friday. It is October 7th, 2022. Here's your morning jog around the economic headlines of the world. Starting off with the jobs report where, listen, payroll's up 263,000. Unemployment rate's 3.5%. It is a really strong economy if you are a worker. Inflation, wage hike, price spiral. Listen, ultimately, dollars are going into the hands of workers are going to get spent, the economy grows. That's how the whole thing works. But of course, in the market's eyes, what does that mean? It means the Fed has additional room to continue hiking interest rates, and that is a bad thing for risk assets. That is a bad thing for stocks that don't want to see additional interest rate increases. So we're back in an interesting time. I remember in 2013, every time that we'd have a good piece of economic news, the market would go down, right? Because the Fed wouldn't cut more, and vice versa, right? When every time we'd have a bad piece of economic news, that was a good thing for the market because it meant the Fed was going to cut. We're functionally in the same period, the same good news as bad news. Just rates are working in the opposite direction. The economy is so strong. Employment and wages are so good that every single time we reconfirm that fact, the market goes down a little bit. Also, listen, in bad markets, Fridays just tend to be extra bad. Folks don't want to hold a risk going into the weekend. Don't worry about it in your portfolio. It's fake prices. There's very low liquidity on Friday. Stuff just gets beaten down because folks don't want to hold risk into the weekend. If you are concerned, don't worry about it. Long-term, markets do tend to rise, especially in strong economies like this one. If you are saying we might have a little bit of a recession here over the next year, especially internationally, sure, that is indeed a probability, quite frankly, for Europe and a possibility here in the U.S. Long-term, you are getting to buy shares in your 401k and investment accounts at a long-term discount. Speaking of discounts, AMD, 7% down. Q3 results not looking too encouraging. Margins down, sales down. What can I say when there are less folks chasing NFTs, chasing crypto? When Bitcoin's not at 60,000, that hurts the semiconductor manufacturers. Not as much demand for PCs. What they really mean is not as much demand for Bitcoin mining rigs. This is all too predictable. It's pin action off of crypto. Fellas, they still have tons of demand for their chips. They are the foundation upon which our AI takeover is built. These companies continue to have huge edges. Do not let them go cheaply. Last but not least, before we get you off to a nice weekend, Credit Suisse wanting to not be the focus of financial Twitter over this weekend, offering to buy back $3 billion worth of debt. That's a lot. That means they have $3 billion worth of cash. They can just say, hey, here, take your money back early. We will buy it back at a profit. That's a pretty strong move for the beleaguered bank. It says, hey, we don't care what our shares are trading at. We don't care what our CDSs are trading at. We're strong. Let's make this move. If you want some additional info throughout the weekend, feel free to find me on the internet. I am out there. Until then, you, your family, hope you have a really good rest of your Friday. I am out.